This week here on our free preview on YouTube, join us as we take a look back at a previous YouTube segment with the headline, The Real Economy versus the Headline Economy. This topic got us a lot of comments, and we want to answer those comments here on our show. For now, sit back, relax, and join us as we take you through the numbers. Hi, Lauren.
Hi, Lindsay.
How are you?
I'm doing great. It feels like fall around here.
I know. It does, but then it was like 90 yesterday.
I think it's going to be like 85 today. And so we went apple picking, but in t-shirts, it's kind of weird.
Yeah, no, I can't. I can't do it until it's a little bit
You're not
crispy.
into fall yet? How was your weekend?
No, it was really great. We did a lot of summery type stuff. My boys were all like outside riding their bikes, building jumps in the backyard, shirtless. You know, water gun fights. So it was very much still a summer weekend in my house. So it was really fun, though.
That's awesome.
Yeah. So we're going to start off a little bit different today.
Yes.
Typically we take article headlines and we talk about that. We're going to kind of backtrack to an article headline from, I believe, 2 weeks ago it was. And kind of go into some of the comments that we were getting on YouTube.
You love to go to the comments section. It's always a dangerous place, but we've actually been fortunate to get good engagement with some viewers, and people have a lot to say. There are a lot of opinions on what we talk about, which makes me excited because someone cares.
Yeah, exactly. That makes me excited too. Like there's no bad comment. Like we'll listen to it all. We'll reread them all. I enjoy reading them. If for nothing else, some thought evoking information.
Yes, then this one was.
This one definitely was, which is why we wanted to talk about it. So, we always want to thank our viewership for engaging with us on our various platforms. It definitely keeps things interesting. And a couple of weeks ago, like I said, we talked about a headline. The headline itself was The Real Economy versus the Headline Economy. And like we said, this particular segment seemed to evoke some comments and some feelings, not just one, several. But in summary, just to kind of go over the comment section, I won't read them all or call anybody out. One of the questions that was specifically asked was, they state the CPI is up 20% since 2020. Is that from the end of 2020? And the concern there is that the prices that we're seeing in the real world are up far greater than 20% on things like groceries, gas, housing, restaurants, etc. There were comments combating our takedown of wage growth and talking about wage growth and, kind of how that lines up with keeping up with inflation or outpacing inflation. The consensus from the comments were that, yes, you're looking at the data, but this is not how we feel.
Right.
And the most passionate of comments stated, to attribute that to misguided feelings is insulting and itself seems like it's pushing a narrative as they accuse the writers of the articles that they cite.
Yes. And we don't want to be insulting.
No.
I feel bad that we insulted anyone.
I know.
That's not the goal.
Right. And so we thought we'd talk about it today.
Absolutely.
We don't want to be tone deaf for sure.
No, and we hear this loud and clear.
Yes, definitely. But I also think it's a great opportunity to remind people why we're here.
Yes.
Why this show was created. And remind everybody that the show is called By the Numbers.
Exactly.
We created this show because there are these headlines out there. They are catchy. They're to evoke fear sometimes.
Right.
Sometimes they're just to evoke readership or comment sections,
I guess we're successful on that one.
We're right. Right, exactly.
Yeah.
But there's only so much that we can do in terms of talking about feelings.
Exactly.
And I try really hard to be the feelings gal in this
You
room.
are. You're my feelings gal.
Yeah.
And I've made this joke before, but I'm an economist. I'm half robot. I mean, I'm not supposed to be feeling and sensing. I'm supposed to be, like we say, by the numbers. All I can do is bring in the data.
Right.
And the data is cold and impersonal. So I hate that I come off as cold and impersonal, but I don't know, it's in the job description.
Right. But I mean, I thought even in that segment, every time we talk about this, that's why we liked that headline, the real economy versus the headline economy, because I'll push back on you and say, okay, you keep telling me that wages are keeping up with inflation, but that's not how my bank account feels. That's not how I feel paycheck to paycheck. And I say I, but I'm sure, and
many,
obviously,
absolutely,
from the comment section, many.
And that's why that headline caught on, right? It really did latch onto something that people feel, even if maybe is more true in some cases than others.
Yeah. So let's just break this down.
Yes.
Let's start with that first question, talking about the CPI being up 20%. Is that since 2020?
So yes, that is since the end of 2020. CPI was up 20.6%. So essentially what we're doing here is we're taking that cumulative total, because we talk about CPI, right? It was 3.2%, it was whatever, but that's on top of, 3.3% last month and 9% at the peak. So we're looking at the cumulative change in CPI, again, 20.6%. That's from 4Q of 2020 to 2Q of 2024.
Okay. All right. And then benchmark that against this next comment regarding wage growth. So if the CPI has been up 20%, what is wage growth in that same time period?
So median annual earnings over that same time period, in the fourth quarter of 2020, it was $51,309. And in the second quarter of 2024, $59,599. That's a 16.2% increase. So yes, over this designated time frame, the CPI was up a little bit more than median annual earnings. Now, if we go back one more year, so let's say instead of the fourth quarter of 2020, again, that's kind of mid-pandemic in the mix of that, concern. If you want to just go fully pre-pandemic, take fourth quarter of 2019, both the CPI and median annual earnings were up exactly 22.1%. So if you take a slightly different time frame, you're going to get different results. It's kind of arbitrary, right? If you take this quarter to that quarter, this quarter to that quarter, that's why typically we do year-over-year comparisons, just because it's benchmarked, it's year over year, 1 year, the end. But again, even that is kind of an arbitrary choice. So I talk so much about cherry picking the data. I do want to present this as holistically as possible, because you can just take, this one quarter, it shot up a little bit more. We can take that and cherry pick it out. Or this one was more normal, take that and cherry pick it. There's going to be a choice made regardless. So what I've done today is I annualized it, I took that cumulative total for a lot of different things that we're going to talk about. And I just took from the fourth quarter of 2020 to the second quarter of 2024, that most recent full quarter, just because we need some arbitrary benchmark. This is the one we have.
Right. Okay. So when we're talking about the articles and we're breaking them down, we're kind of combating their cherry picking and perhaps their base that they started with. And we kind of try to zoom out and we look at the year over year comparison, or the 12-12 rates.
The 12-12 rate of change is really good for that, because I've seen it in some articles. I don't think it was as egregious in this one, but sometimes they'll say from 2020 to 2024, but then for this other thing from 2022 to 2024, because maybe that's when they hit their real peak. And so they'll take different time frames. I'm taking just the same one across the board. This is what we chose with that article, right? With that YouTube comment, 4Q20, 2Q 2024.
Okay, so every data point that you share today is going to be from the fourth.
For this first segment,
for this first segment, I think we're going to go into some of those listed sections or sectors that the commenter talked about.
Exactly, and the commenter called out a few questions. And so I wanted to really drill down. Again, all I can do is buy the numbers. I know you're probably not feeling great if you're in XYZ, so I can't get to the feelings, but I can get the numbers.
But I want to also stop for 1 second and think about it from this perspective. A lot of times when we're forecasting for our clients and we're giving them these data-driven forecasts that are kind of this hands off the wheel, this is what the markets are saying for your business. We have similar conversations, obviously on a much grander scale, because we're talking about a business, not just someone's personal bank account. But they'll say, no, this is not what we're doing. This is not what we're seeing in business. And then we need to start to ask, well, what kind of internal decisions are you making to make you feel differently than the markets? And I think as you go through these numbers, that's what I want to encourage people to think. We're sharing the numbers with you, But when you're listening to us or you're reading articles like this that aren't lining up with how you're feeling, start to ask yourself, and we're gonna give you some questions to ask
We're doing a little therapy session.
Exactly, my favorite.
Yes.
But yeah, like think about what decisions you're making internally, which may or may not be making you feel differently than the numbers are saying.
Exactly.
So I will release you to
data dump.
Data dump.
So I wanted to start with grocery prices because this was one thing that it was very prevalent in the article that we discussed. It was, again, brought up by the comments and several commenters. In fact, they say prices on the grocery store shelves. And they're absolutely right. Grocery store prices are up more than the overall CPI. We're going to talk about this in the next segment, kind of some of the drivers and the reasons there.
Yep.
But for the numbers, over the same time frame, 4Q20 to 2Q24, grocery prices were up 21.7%. So not a ton more, right? 20.6% for overall CPI, but a little bit more in grocery prices.
Yep.
Now, here's our first kind of where do you fall in this spectrum question. It depends what you're buying at the grocery store as to how you feel. If you're doing, what is it, the Costco hot dog that hasn't changed price ever, or the Arizona iced tea, it's printed on the can, they never go up in price.
Right.
Sure, your inflation's a lot lower. If you're buying bread products, those on average are up 30.4%.
Wow.
Right. A lot bigger.
That is increase. A lot bigger.
Veal and beef prices, 26.5% jump.
Okay.
So certain categories, yes, are much higher versus, and this one was, I don't know, interesting to me, kind of exciting because I try to eat healthy, but fruit prices are only up 12.7% and vegetable prices 8.8%. So they're still up, but that cumulative difference, it's not nearly as much as grocery prices overall. So if you're eating fresh fruit and veggies, maybe you didn't notice that increase quite so much as someone who's buying beef and bread.
Right. Yeah, exactly. How you eat and what you eat is going to matter when you're buying at the grocery store. And we talk about trading down all the time. We'll talk about that a little bit more in the next segment as well. But we're all making decisions at the grocery store to try to keep that budget as close to what it used to be.
Right. So maybe there is some shift again, but it does also matter if you're just used to shopping the outsides and shopping for those, fruits, veggies, those things versus processed foods saw a little bit higher increase. That's where you might say, no, I don't feel a 21.7% jump in my grocery spending.
Right. Yeah. Okay. So that's groceries. What about other areas of the economy that we are all using on a relatively frequent basis?
Sure. Let's start with gas prices. That's a fun one to complain about, right?
You have to eat.
You have to eat. You probably have to drive somewhere or take public transportation. I didn't pull those numbers, but gas prices, I feel like this is such a bellwether of how's the economy doing? What are the prices at the pump, right? So here's one of the, I think this is actually the biggest jump, I'll quote. Gas prices in the fourth quarter of 2020 averaged nationally $2.24. Today, second quarter of this year, $3.68. That makes for a, drumroll please, 63.9% increase.
Whoa.
Yes.
But I also feel like we see these big swings at the gas pump all the time.
We do.
And we're talking about the second quarter. That's when the weather's breaking and everybody's
summer blend, right?
Yeah, exactly. So it's a little bit, I think that one's kind of a hard one to look at.
I agree. Again, all I'm giving you are the numbers. I could do what we accuse all these articles of doing if I compared this back to when oil prices got really high with Russia's invasion of Ukraine. So if we started at the midpoint of this time frame, gas prices are down today, So again, I don't want to cherry pick.
That's a good point, though.
We could make that argument, but it wouldn't be fair in the same way that the opposite is also not fair. So 63.9% increase in gas prices, that's hefty. And if you're driving a lot, you probably feel that. If you drive a little less, right? You work from home, maybe you just go out on the weekends, or I don't know where people are driving when. Then again, you might not feel that pinch quite so much. You might not notice that increase, especially if your driving habits have changed since 2020.
Well, that was another thing. It's like there's all this trading happening in our lifestyles. So yeah, it's easy to focus on, you used to budget for $150 a week at the grocery store, and now you're at $250 a week. It's that's shocking to your budget for sure. But you may have been spending $600 a month on gas, and now you're spending.
Now you're not doing that.
Half of that, or
exactly.
Yeah. So, I mean, those are things that I seem to pay attention to as well.
But again, we cannot say, we can say what the average person is doing, but you won't feel, none of us feel average.
And I think that's part of the issue when we're looking at it. I mean, it's a good point to make. Let's remind everybody, we are macro economists.
Exactly.
We have to look at data at some grand scope. We can't, look at it necessarily. I mean, I'm sure we could for each individual income bracket and how that person's being impacted.
Exactly.
But when we talk about it on our little 60-minute show or our maximum 15 minutes on YouTube or whatever the time allotted is there, we're not going to be able to dig that deep
to this individual.
So it's not that we're tone deaf. It's not that we're negating how other people are feeling. And that's why
I don't mean to negate how anyone is feeling.
No.
I mean, again, all we can do is look at the aggregate. And usually the perspective we're coming from is, okay, what is consumer demand going to do then?
Yes.
However we feel, how will we behave, right? So I think the big one, and this is the giant question we have talked so much about, but never in quite this breakdown, is housing. This person mentioned how much more housing costs now. We've talked a lot, so I'm not going to belabor the point on things like insurance. Those prices, have gone up a little bit more than the average. But housing costs itself, it really matters where you're sitting. If you're like me, I hate to say, locked into a very low mortgage rate in your existing home, you're probably feeling pretty great. Home values over this time frame are up 41.3%. in total. So
lots of equity built into those homes at the 3% or
at a 3% mortgage rate, that's pretty good. Versus if someone rent at the start of our time frame here, late 2020, average, and again, this is a national average, a lot of regional variability. But the national average, which is all we can look at, is it was at that point $1,147. Bring that forward to second quarter of this year, $1,412. That's up 22.4%.
Yeah.
So you're paying a lot more in rent. Versus even if someone like you sold your home, you bought a new home at a higher mortgage rate, you probably feel that pinch of your monthly mortgage payment has gone up quite a bit. We couldn't really average that. There are so many factors. But you probably do feel the downside there versus someone like me, easy for me to say, that the costs aren't out of control. I'm sitting on a home that I own.
Yeah. So you might be spending more of your paycheck on the areas that are not as much in your control. But because we are a country fortunate enough to have these fixed rate interest payments on our mortgages, your home costs have not really changed.
No, my home costs are great right now.
Rub it in.
I know. I'm sorry.
But it's all
relative.
All relative.
It's absolutely all relative. So I pulled a couple of other categories. Consumer education cost. I was surprised this one was so low. That's only up 3.1%.
Interesting.
I know. I thought that should have been a little bit higher.
I wonder if they can't take as much because there's not this hyper focus on higher education in the traditional sense as it used to be.
And I think especially kind of not immediate post-pandemic, not in 2020, but those years since then, there was a bigger move to remote work, which maybe brought some costs down. And I think there was that kind of, maybe we still do see tuition increasing. It's not going down, but that cumulative total is a little bit more in hand. This is another one. I should check these numbers because I was surprised medical costs only up 8.5%. That was on the low end of things.
Interesting.
Again, consumer medical costs. So insurance is a whole nother dimension that's just very hard to normalize numbers for.
Yep.
And you'll be happy to hear this one, Lindsay. Apparel cost only up 13.5%. So you can go on that spending binge. You always look fantastic when you come in. So
thank you. I try to be a bargain shopper. But there's certain things that people like luxury items too. I saw an interesting thing on Instagram that compared the value of a Chanel bag to gold, and that Chanel actually has held its value and been worth more.
You're kidding me.
When compared like side by side.
Well, there you go. It's a good investment then.
Gold. Yeah,
that's so funny.
I know. So I find that stuff interesting. Not that I own a Chanel bag, but
we're doing that article next week. Let's go.
I thought about it last time we talked about gold. I was like, I want to know how real this is. So that was your full
those
list
were the big categories. Yeah, that was my list. So again, as we're getting into this soul searching question of how good do you feel? How good should you feel? You as the individual, not you, the aggregate. These are some of the questions that I would be asking.
Yeah.
I mean, have you changed jobs? Did you get more than the average raise? Maybe you're feeling better, or did you not? Maybe then you don't feel like you did keep up. That's true.
Right.
Averages are just that, an average. Some people will be above, some people will be below.
Yeah.
Do you own a home or do you rent? That's going to be a huge issue at the moment. And again, I mentioned this before, but we are just looking at the national average. CPI, I've given a lot of criticism. This is an urban measure. It doesn't include all regions like rural areas of the country. I've mentioned that
That's
before.
That's a really good point. Yeah.
And even with rent, if you're in a high cost of living city where costs are rising very, kind of continually, your local cost of living will impact how you feel. Additionally, kind of the last question I guess I would ask is, what does your portfolio look like? If you're in the stock market, the average stock increase, the stock market over this time was up 48.1%. So you probably feel a lot wealthier versus if someone has more debt and you're just seeing the interest rate increase as it spiked so aggressively over that 2020 to 2024 timeframe.
Right.
Again, then that's another cost at a higher rate that you hadn't maybe been planning for. So it just comes down to who that individual is. All I can do is talk averages.
Right, exactly. And I mean, just thinking about it and like all of these factors and in full context, there are going to be people who have really benefited over the course of the last 4 years from the experience of the pandemic. I don't think any of us sat here in March of 2020 thinking it was going to be a good thing.
No.
I think that there was a lot of good that came out of it.
Yep.
But then there are going to be people who experienced that time period with loss and with, a more difficult shift in their lifestyle, whether it was from job loss or illness, we certainly do not want to gloss over any of that stuff. It's just not what that particular article was going for.
I agree.
So I think that's why we didn't hit on all of the little nuances. But of course, like we're here to sit here and be humble and say, like, maybe we got it wrong. Maybe we should have taken it a little bit deeper.
I think and I'm glad we did.
Yeah.
I'm glad we circled back to it. And thank you for that comment and those comments, multiple, but especially, there was that one that you quoted that really, I think, set us off as something that we didn't do enough here. There is more to be done.
Right, exactly. So we've learned from this, and I'll try to push the feelings a little bit harder in here. I mean, maybe in particular on our YouTube segment, because we're hitting a different audience there. I think sometimes we get in this groove of talking about the data, and we talk about people that want to talk to us about data all day. It might be a different audience out there in this scenario.
Whatever audience, I'm glad they're here. I'm glad they're taking a little bit of context to the numbers again. And even if you accuse us of cherry picking the data, at least that's something you're watching out for.
Yes, exactly. That's all the time we have for today here on our free segment on YouTube. Remember to like and subscribe. And if you'd like to subscribe to full-length episodes, click on the link in the description below. But until next time, bye, Lauren.
Bye, Lindsay.